I think Bitcoin got down to like under $4,000. And I think a lot of people sold. And it's like, here we are at $45,000. So you just have to sort of set it and forget it. That's really the only strategy to play these assets. Yeah, I mean, look, we love Ethereum as well. We're big hodlers in Ether and Bitcoin. And I guess for some people, like Bitcoin's easier to understand as like digital gold.
Right.
And if you look at the market cap of gold, I think it's like $9 trillion. So if you look at the market cap of Bitcoin and it overtakes gold, you can sort of do the math. And we think it's like a 10x from here at the minimum. And we actually wrote a piece last summer when Bitcoin was at 13,000 called The Case for $500,000 Bitcoin.
Right.
And so we're up 5x from last summer, but we still got 10x to go before Bitcoin overtakes gold. But I think Ethereum is this sort of creative design space, a decentralized operating system, and it's sort of unbounded. Like, how can you put a sort of a upper bound on the size of this space where you can just create and build all kinds of decentralized apps and things on top of it. So given that you're like a more creative person and you gravitate towards Ether, that makes actually a lot of sense to me. I think people who like have spent a lot of time, let's say on Wall Street or in financial markets, might gravitate first to Bitcoin because they're like, oh, this is a fixed hard asset. It makes a lot of sense to them. That's all what we sort of say is like buy and hold and maybe don't look at it month to month or year to year if you have trouble sort of watching the gyrations of the market, because it is a volatile market. But I think it's all about holding this sort of digital real estate or digital value. And nobody really makes money like day trading or trading in and out of things. It's just like too hard to time and nobody can predict the future.
Right.
I mean, there's a big sell-off in March during the early part of the pandemic. I think Bitcoin got down to like under $4,000, and I think a lot of people sold. And it's like, here we are at $45,000. So you just have to sort of set it and forget it. That's really the only strategy to play these assets. Just like you would want to go if we were talking in if we were in the late 90s, you'd want to go long Google. Long Amazon and literally hold them for 25 years, not trade in and out.
The mistake was not buying them or selling them.
And it's one of those things. I think people they look at Bitcoin and are like, oh my gosh, it's at 45,000. I saw it at 10,000. Now it's too expensive or whatever. It's all just this mental construct. But if you just sort of get in it a little bit and feel it and get comfortable, dip your toe in the water. That's really the way to do it.
Yeah, Bitcoin is a store of value. It's a hedge to inflation. So when the Fed prints all this money, the $100 you have is less scarce. So it's losing power. So it's better to put that value in something like gold or Bitcoin, or maybe an investment like Amazon that actually appreciates. Because if you put cash in your mattress, over time, you're losing a lot of value. So that's the appeal to Bitcoin.